All right, everybody, welcome to the watch list of June 30th. Now, this week, we do have Independence Day in America, July 4th. So it's a holiday week, unfortunately, but there's definitely a lot of events to talk about this week that can move the markets outside of the holiday. So Monday, which is tomorrow, we have PMI. All right, that's a decent news event. And ISM manufacturing at 10 a.m. Cool. But the thing about this Monday is I like this Monday because this is the Monday of non-farm payroll week. And non-farm payroll is pretty much the employment data. The employment data comes out on the first Friday of every month. All right. So in other words, first, and that's the biggest market mover in the whole stock market is the employment news. And so Monday of non-farm payroll Friday, right? That Monday is typically some really good price action. Typically. Now, nothing's 100%, but I like to get involved on these Mondays here. So it's non-farm payroll Monday. I love that. We got PMI, ISM. I'm looking for some decent price action pretty much early in the week. And I didn't see this until now. Literally, it's funny. We got Jerome Powell speaking in Portugal. I don't know what that entails, but on Tuesday at 9:30, Jerome Powell is going to be speaking in Portugal. What does that entail? I don't know. I almost feel like they want to make the markets move. So it's like, yo, we need price action to do something. So Jerome got to speak here. I swear, like, but let me not be like a conspiracy guy or whatever. But I don't know. I don't know what he possibly could be talking about right now in Portugal. So, Cece said she not trading Tuesday. All right, listen, I don't blame you. So that's 9:30 on Tuesday. And then Wednesday we got
$250 transfer fee.
Somebody came on mute. Make sure y'all check y'all mic so y'all don't come on mute too often. So Wednesday here we got PMI and minutes, FOMC minutes. Now don't get it confused, y'all. I don't try to think that it's FOMC meeting. There's a difference. This is the minutes. This is just they're releasing a document that's explaining the topics that they talked about and the points that were made last FOMC meeting. All right. So it's just a simple document that comes out at 2 p.m. You're probably gonna see like a flash candle and nothing too crazy. It's not the biggest market mover. But be careful if you're trading at that time because they will show you a candle that's going to be an explosive candle, but it's nothing too crazy. And then Thursday here is just it's literally the holiday. Friday is non-farm payroll day. Friday is the day where we're going to get the unemployment report and stuff. So that's almost self-explanatory. The market is going to move on Friday. All right. So jam-packed week, honestly, I'm excited for it. And with that being said, that's the temperature, that's the weather. So it looks like a sunny week for us, not just outside, but a sunny week in the market. So I always call when we check the economic reports, if you're new here, we always call that the weather report. So we just got the weather. We know what days is the best days to be outside, inside of the market. All right, so let's get to the actual charts now and see if the technicals can align with that. So here on the dollar, we start here because this is something we use for sentiment as well. And I always have to give this like intro to it because I have new people coming into here every week and from different experience levels. So I always just let y'all know, I always come to the dollar because the dollar typically moves inversely with the NASDAQ. And so being that we try to trade the NASDAQ or the S&P, we want to know what the dollar is doing because this tells the truth. I always say the dollar tells the truth because usually when a dollar, let's say, is super bearish, sometimes NASDAQ is still consolidating. And next thing you know, NASDAQ will take off to the upside. But the dollar already showed you that it was trading down. So you shouldn't even be surprised to see in a day or two the NASDAQ rocketing to the upside. So I like to use this as like a leading indicator as well as the 2-year bonds. But for right now, what's the analysis on the dollar? So for the dollar here, we've been staying bullish on it. Last week's analysis for the dollar, if you see this red candle, this is Monday. So when we got to the charts on Sunday, if you guys remember, the plan was I said I want price to use this BTSMC to take us to the highest body on the weekly time frame. What I mean by highest body, if you look at the weekly chart, you see how this is a swing point, right? Price doesn't always come and trade above the wicks. A lot of times price just wants a simple low-hanging fruit objective of touching the highest body at a swing point. So that's what I drew out here. And then if you see how things actually ended up delivering, let me actually speed that up to 4 hour. We ended up using this BTSMC and coming to the highest body. And that was the high of the week. We bounced there twice. That was the high of the week. and then here we are. And so we're now like headed to the downside a little bit, still rejecting that highest body target. So that was a great exit. If somebody were to trade DXY, that would be a great trade. Bissy to the highest body. We double top there. Not that I trade patterns, but it is a double top. And so now we're here we may drop down lower, but I personally don't feel like we're going to be bearish on the dollar. I just feel like we're going to drop lower at first before trading back to the upside. So I'm watching to see if this is just going to be a sweep. See this wick right here? Are we just going to sweep this wick and push back up? If not, I want to see us potentially hold this BTSMC still to move higher. I just ultimately don't feel like the dollar is going to be bearish all of a sudden. I know we have a bearish open so far in the first 50 minutes of the market, but I can see the dollar pushing up. I anticipate that the dollar will see its way over these highs sometime this week. I believe that you see these relatively equal highs on the daily chart. I think we're going to see our way over that. And so that is my analysis. Now, of course, I'm never stuck to any analysis. I would get bearish on the dollar more likely if it loses these lows right here. So if it loses these lows, I'll be okay, never mind. I guess the dollar is about to trade back lower again. But for anywhere above those lows, honestly, anywhere in here, I'm cool. I can see the dollar pushing back up and taking these highs. All right. So I'm pretty bullish on the dollar right now. Now the 2-year, we were watching the 2-year and we were trying to see if the 2-year can find its way to move excessively or aggressively higher over these relatively equal highs. So you see how we had a high right here, we had a high right there, and we had another high right there. When price made this up move, which we talked about price using this BTSMC to take us back to the upside. When price made this up move, we said, all right, this might be the rally. This might be the one. Price came, it swept it so far. And then on another watch list, we said, okay, everything is going to depend on if we could hold the upper half of this daily BTSMC. So price comes into the upper half of it. Well, on this green candle, it touched the tip of it and pushed, but it didn't hold, right? Then we consolidated and then we dropped back down. And then this is what it looked like on the 4-hour real quick. I'm about to show you something. So I want you to peep how on the daily, we have a doji. I don't know what's up in trading view, but on the daily, notice that we closed all the way up here. Look at the 4-hour though. That's crazy, right? It's like they trying to trick us or something. I think trading view is glitching right now or something, but we really closed all the way down here. And so the first place I wanted to see us run, obviously, I think a very, very obvious target is, okay, we're going to run these lows. So far in the past 50 minutes, you see that we ran those lows, but it looks like a sweep because look where the bodies are right now. We closed right back inside the range. So this could be a sweep so far, but we'll see, right? We'll see. No matter what though, the fact that we even have bodies close under the 50% of this BTSMC, notice that I'm on the daily chart again, and you need to keep your memory tight because I told y'all this red candle is not really a doji. We really closed all the way down here. I hope you follow me. We really closed all the way down here. So based on the fact that I know logically we closed under the 50% of this daily BTSMC, I do feel that we're going to have some more bearishness enter this ticker on the 2-year. And why am I looking at the 2-year? Because for new people in here, this is another leading indicator for markets. Typically, if the 2-year is bearish, you should be able to see bearishness enter the NASDAQ. Lady Kelsa takes set off. Thank you for that. Thank you. So it wasn't TradingView that was glitching. It was me that has set toggled on. All right. And for people whose 2-year chart looks like this, I'm going to show you something. This is a little TradingView tip as well. Look at this. Look how they separated the whole price leg. It's like they literally ripped it apart. Now I'm going to press B adjust. On the bottom right, I'm going to press B adjust. Fixed it, right? B adjust off, B adjust on, B adjust off, B adjust on. All right. So y'all can mess with that so you don't get confused. Because I thought TradingView was glitching crazy. And I realized like, okay, I have to keep toggling with these things to get the true visual. So I'm going to keep set off and I'm going to keep B adjust on so my chart can look normal like this. And so, yeah, we close under the 50% of this BTSMC. I do feel like we're going to move lower. I'm looking at price running these lows sometime this week. Now, where will I lose that? I would lose that that bearishness if we see over the highs of this red candle. If we see over the highs of Friday with fair value gaps, with 4-hour fair value gaps to the upside, if I see 4-hour bullish fair value gaps taking these highs, then I would anticipate a higher move. Other than that, I think we're gonna find our way back to the downside. All right. So far I have somewhat of a bearish outlook on the markets based on me expecting bullishness on the dollar and bearishness on the 2-year. That's for one. Now I'm gonna briefly touch on Forex for just a second, because I got some Forex people in the room. And largely, as you guys saw last week, Euro USD is not tradable right now, being that it's in a tight range. And so there's no POIs to really work off of in here. I know we've been holding this 4-hour SIBI ultimately, but it didn't make us run these lows. We got a triple bottom down here, which is, for me, I look at this as liquidity. We have a whole sell side liquidity pool down here that we can come run. We may want to address this buy side pool first, but ultimately what I do in this scenario is I kind of usually come to the higher time frame to get direction. The higher time frame makes me feel on this monthly chart that it wants to head lower. Right, so here what I'm doing, I'm going to monthly. The monthly tells me I believe that we want to head lower on this ticker. The weekly is telling me the same thing. I think we want to head lower on this ticker. So now when I come to the daily, this is a gem right here. When I come to the daily and I see a daily consolidation, I need to ask myself, okay, if I'm expecting bearishness, what kind of delivery would happen if we're truly bearish on this ticker out of a consolidation? There's typically only two ways it will go. Based on the fact that we're consolidating, I would expect a run above these highs before dropping lower, or it could just be as simple as we just drop lower without running those highs. But if we drop lower, we would want to see fair value gaps as we run the lows. All right. So I'm talking about bearish fair value gap. So either way, I have a plan for both sides. If we come above these highs, I'm gonna be looking for signs that price wants to trade back to the downside. And so, you know, if we make it, let's say, bullish fair value gaps to the upside, if we come back in with a bearish fair value gap out of nowhere, I kind of trust in that. We got a bullish one, and then you got a bearish one invalidating the bullish one. Oh yeah, chef's kiss. Let's take that to the downside and take out these lows right here. And we already have a draw on the higher time frame telling us we may want to come to 1.06. All right, and like Nikki has said, and sorry if I pronounced it wrong, that would be an AMD, right? We have accumulation, manipulate to the upside, distribute to the downside. All right, or price doesn't always do that. Sometimes it just goes. And so, but if we're gonna just go, I don't think you should trade on the inside of this range. I think you should be looking for fair value gaps outside of the range. We did this on CL is an example of how we executed. For people who've been here for multiple weeks, if y'all remember CL, we executed CL to the upside and the downside, like literally picture perfect to the targets, to exactly how it would deliver everything. And we took that out of a consolidation. So I hope you guys took note on how CL's consolidation got treated. We're going to treat Euro USD the same exact way. All right. Because it doesn't matter if it's Forex, commodities, options, futures, it doesn't matter. All these things do the same thing. All right. Now, same vibes, honestly, for British pound. You know, I'm what do I say, 625 highs above here. Okay, so if we come above this red wick, I'm looking for price to come to the top of this green wick, or at least come to the highest body. You know, that's always a safe objective. So if we go above this red wick, I'm looking for price to come to up here, the 625 highs. I don't want to trade on the inside of this. Notice I said bearish under here. If we lose the lows from last week, if we lose last week's lows, I'm expecting to see continuation to the downside. Anywhere in the middle, I don't want to touch it. So Forex is in a big consolidation. Here on New Zealand dollar, we're using this 4-hour BTSMC I had. Actually, I don't think we touched it. Let me see. No, we actually didn't even touch. No, we did. Hold up. Let me see. Why do I have two rectangles here? I don't know what that is. So we did touch the 4-hour BTSMC. I don't know what this is, so I'm gonna delete it. So there was a 4-hour BTSMC. We're using it so far to move to the upside. Nice reaction at open, right? It's a real nice reaction to the 4-hour BTSMC. Look at that. Imagine you snipe this. I know I wasn't looking at it, but this, whoever's in New Zealand dollar, y'all running right now. Hopefully somebody's catching that trade. But we want to use this. Easy objective right now would be to just take the previous highs based on probabilities. That's not a call out. Based on probabilities, you would think it's probably going to take the previous highs and maybe even these highs. What I'm trying to find out is, do we continue past those highs, right? Do we continue, or do we just sweep it and come back to the downside? Because based on me expecting some bearishness on the dollar itself, I would expect New Zealand dollar to end up trading back to the downside. All right. And that's Forex people know what I mean. All right. So we'll see. The dollar right now is red. So it makes sense that New Zealand is green. And once again, I think the dollar is going to flip green. So they should flip red. So I hope y'all follow me. And maybe one more. Looking for continued bullishness on USD, Swiss franc, and USD JPY. This delivered, by the way. I don't know if y'all remember, we talked about price coming into running this buy side liquidity. This delivered last week. So shout out to people who was able to catch the USD JPY trade, and we'll move on from there. So that's Forex for you. A lot of patience involved, especially because on weeks where we have major news coming into the market, the dollar will consolidate until that news event comes. So you want to be careful getting too anxious on your Forex trades. I say wait for the news to drop, for sure. All right, now let's get to the NASDAQ, the main event for me, because that's my favorite ticket to trade. So, but we got some fire outside of just the NASDAQ. I'm gonna show you some other things. So here on the NAS, man, on this weekly time frame, seen last week was a doji. The week before that was pretty much a doji. I don't care about candlestick patterns and stuff like that. So I'm not trying to name them. I'm just saying that we're seeing a lack of what we call displacement, or a lack of energy to one direction. Notice that it got real back and forth the past couple of weeks. So price has been consolidating. Price has been slowing down after such a crazy rally. Wouldn't be surprised to see a retracement coming to the market very soon at all. Here on the daily chart, actually, let's go to 4 hour. Notice last week, we started a journey into this 4 hour SIBI. I didn't even expect this rejection at the time, right? I told you guys in the chat, I expected us to do an AMD, right? I expected us to run buy side and come back to running this sell side. Well, first I said come back to this BTSMC, but I actually didn't write this in the chat. I think I said this on when I was live trading with my mentees, I might have said this, but either way, I expected us to run that and come all the way to these lows. In the free community, I said, let's just take it to the BTSMC, because I was like, that's an easy target. And obviously that ended up happening. We ran the highs, we ran the yellow line, came back to the BTSMC, and we'll see what happens next. But I do think we're going to continue even further to the downside. Personally, I don't expect us to use this BTSMC to run back to the upside. I don't expect to see that. And what I said surprised me was when we traded this high, like I'm talking about in live action, like let's go to the 5 minute and see. When we were making this journey up here, I was like, oh shoot, maybe I'm wrong. I was like, maybe we're not gonna just sweep, maybe we're not just gonna sweep the yellow line to run lower, because I thought we did that already. Look at this. Look here at 8:30, we ran it on PCE news. We came back in really strong. I'm like, oh, it's lit. I'm like, I'm about to catch the short of the century. I'm about to take this all the way down there. But when we ran back all the way up here, I was like, oh dang, I guess maybe not. But so this was definitely a tricky area of price action right here. And then obviously price ended up coming back to the downside eventually. And I see here it's currently rejecting the 1 hour SIBI as I'm speaking, that I had drawn here already, which is my next point. So, being that it came back into the range, it was funky. It was a nasty delivery on Friday. This was not easy to trade. All right. I was able to catch some downside, but don't get me wrong, it wasn't easy. Now that we came back here, we bounced out of here. Now it's battle of the fair value gaps. You got this 4 hour BTSMC that could potentially pull price back to the upside. You also have this 1 hour SIBI that's supposed to send price back to the downside. As we see here early, it's kind of sending us back to the downside. Like right now, it seems very likely that we're going to end up taking these lows. I don't trade hours that are not probable. So 7 o'clock p.m. on a Sunday especially is not a probable time of price action. So my advice for you is be careful about the times you trade. Just because on price action it may look like a simple setup, you may get caught in some nonsense. Who's tried to trade Asia before and price ends up doing this to you? I just say protect your account. Even though it seems easy, oh, we're gonna take the yellow line, let me scalp that. Nakia could relate, I know I could relate. Even though the setup may look so clear to me, I still just like, I don't trade sessions that don't have a lot of liquidity in it. So just be careful to all say, but Once again, I do want to see us reject this SIBI like how we're doing so far and continue to the downside. And ultimately, once again, I want to see us push even lower. So that's NASDAQ. Now let's go to, my fault. Let me say where I would take it. So if we're able to run these lows, if we're able to run these lows this week, I'm expecting a continuation. I would expect a continuation, even taking it to 19,513. Right, 19,513 on the micro contracts. I would expect a continuation to there at least. And then also if we end up coming here, I think the next destination price will get to is I want to see what price does with this red candle. All right, so this red candle on the weekly chart, I want to see price come here next. Then I will have to see what we do from there, because from there, I can't say, yo, when we come to this red candle, we're just gonna bounce and go. I don't know that yet, because it depends how we get to that red candle, as well as how we react to it. Because if we come to this red candle and it's looking like this, we start engineering liquidity into it, and then we pop out of it with some daily bullish fair value gaps. I'm trusting that, and I'm gonna try to take price back to all-time highs. But if we come into this area with some bearish fair value guys and it start, and they're being respected, then I'm like, okay, cool. Now the market's about to see some serious downside, because under this red candle, I'm not gonna lie, not to call it super early, but under this red candle, I think we're coming to these lows next. I don't care about none of these bullish fair value gaps. I don't think any of these fair value gaps would hold. I think these are irrelevant. I think we would just go for those lows next. All right, so, a lot to be seen, but I think in the short term, like ultra short term, once again, I just want to see us take the lows of last week's lows, right? No, maybe not. I guess these are last week's lows, but take Wednesday's lows. I want to see that first. If we take Wednesday's lows, I'm looking for us to take the lows of the week, lows of last week. If we take the lows of last week, where's the next objective? Coming to 19,513. After that, what's the next objective? Coming to that weekly red candle. All right, so that's my NASDAQ plan. Now, that's a bearish plan. Let's always talk upside. Because you got to be prepared for anything, and we're not together every day. So for upside, I think I will be convinced on upside if we have to start. First of all, I want us to leave this range. So if we start coming to the upper half of this red wick, we're most likely gonna go to all-time highs. There's no reason for price to come back all the way up here to come all the way back down here. So if price comes all the way back up here, we're probably gonna run all-time highs up in here. Okay, so if price comes up here, then I would definitely get long on something, any retracement into a bullish tool. Like if there's a bullish fair value gap under this, I would take that entry to up there. Or if there's some type of an order block, or maybe we could use something as a breaker or something like that, I'm bullish on it and I want to run all-time high. So, but even if this SIBI that we're rejecting currently, even if it doesn't hold at first, I would not be surprised to see price come even into these wicks and reject it and come down. I just, I don't really believe in any upside, especially if it's choppy, especially if the upside is choppy. I'm just a non-believer in it. But at the same time, I want you guys to note that anytime we're in a range of price action like this, where the bearish delivery was choppy, the bullish delivery was choppy, we came back into the range like this, it's like you got to be careful of any POI, because I know that this SIBI looks nice and all, but we don't have to use it because we're in a range. And when we're trading in a range, everything is suspect. All fair value gaps are suspect. All order blocks are suspect. All whatever chart patterns you use, candlestick patterns, everything is suspect, because in a range, the point of price action is largely to go sideways. So you can't be using bearish stuff if there is no bearish intent. All right, so I just say take every POI, such as this SIBI, with a grain of salt. The most probable trades on the NASDAQ will occur under this BTSMC. So if we lose this BTSMC, this target down here becomes very obvious. Feel me? And so we definitely want to be careful on the inside of this range, but under the purple, it gets really nice, I think, in my opinion. I think it's going to get nice under the purple. All right, so that's that. Now, and like Bernie said, seek and destroy conditions in a range, right? That's what we call seek and destroy conditions, which is, in other words, just chop. Just chop. That's all that means, y'all. It's just chop. So we rejected the CE of the hourly here early in the week, not early in the week, that was Friday, I'm tweaking. Friday ran up, rejected here, came down strong. ES looked really good as an AMD. So this is what I was talking about, where you have consolidation, you manipulate to the upside, come down hard. So we came down to make equal bottoms again. Do y'all see this, y'all? You see what ES did? Look at this. You got 4 touches. This is what retail would call, oh, it's a nice support level. Now, I don't trade support or resistance. So I trade liquidity. And so basically, I want to trade the move when we take that, because typically when we take liquidity, we take it super aggressively. And so those are the best trades. And so when we do take, or if we take these lows, it should be a really nice sell. And so you want to get yourself in position for those sell-offs. And so one thing that could potentially happen is we could use this hourly SIBI to push back down. We haven't touched it so far. We came really close. I'm tweaking. It's drawn incorrectly. We did touch this. Look. I don't know why I got pushed up like that on my chart, but I'm weak. We actually rejected it very beautifully. If you can see that, let's see the 5-minute. That's nice, right? That's nice. Look how we rejected this early here and early here on Sunday's trading session. And we want to see continuation, even if we can reject this 5-minute SIBI and just continue to the downside. But once again, anything in Asia, 1, and 2, anything inside of a range to me is just, I'm always going to be suspect about it. But ideally, yes, we would love to use this SIBI to take us to run these lows. I don't know if they're going to do that in Asia or London. I don't know what I just pressed. That's weird. I never touched that button before. But they put me on a 1 minute. Where am I on TradingView? All right, so I what was I gonna say? Oh yeah, I almost feel that they're gonna leave this open for us, y'all. They're gonna leave that liquidity until New York. I wouldn't be surprised to see New York take this, but maybe London. I guess London could take it too. So just be careful getting caught up in chop, y'all, because it could definitely happen. But at least you guys know where I believe price is going now. A bullish plan for ES. A bullish plan for ES, man. If we come above the 50% of this daily wick, then I would believe we're gonna end up running higher. But other than that, I don't really believe in upside on ES right now like that. We're in a range on a daily chart. I think this is self-explanatory, and that's why I'm trying to tell y'all just to be careful. Trading a range will always be difficult no matter who you are. But ultimately, I think we're gonna see some downside, and you guys are seeing why I say so. We talked about DXY, we talked about the 2-year, we talked about all the reasons we had on NASDAQ and ES. And now let's go ahead and check out the Dow and see what the Dow is talking about. So on the Dow, this is what I had charted. The Dow looks real nasty, but there was a daily SIBI that we had initially rejected. I don't like the rejection itself because it's choppy. But at least I could say this. If this is the start of a bullish move, hypothetically, what kind of bullish move starts off like this? So isn't it suspect? And how many times have I honed in on or tried to pound home the fact that you don't really want to be trusting moves that look like this, because you should expect moves that look like that to get destroyed. That's not what a true uptrends look like. This, you see this green move, that's what a real uptrend look like. And you see this red move, that's what a real downtrend look like. So this is a nice V-shaped reversal. Both sides of the market, were beautiful. What the heck is this? There's way more dojis in this price leg than there are, impulsive candles in this price leg. So that's self-explanatory. And so I'm kind of waiting for Dow to show us energy back to the downside. On the 4-hour, you can see that, this is nasty, right? I know bodies held this SIBI, and technically bodies held under 50% of this SIBI. So yeah, it's holding it. And y'all know at fair value guys, we like bodies to hold it. But bruh, look how high it ran. Like, take this all with a grain of salt. Like, just be careful trading in a range. I think that if we're able to run last week's low or Friday's low, which I think is last week's low in general, yeah, so whatever. If we're able to run Friday's lows, my next destination for the Dow Jones is the daily BTSMC below. As I told y'all before, my Dow Jones chart looks mad weird right now though. Why does it look like this? Like, I wonder if I press something, because I swear it didn't look like this before. Let me see some. Bro, I don't know what I just did. Oh, I'm in 1 minute. I'm like, what? Hold on, y'all. Hold on. Let's make sure. Yeah, I don't know what's up. I'll figure this out later. I don't know. There's a busy here in the daily chart. I don't know why I look like this right now though. Set, is it? You said it's set. Let me see. Maybe if I press. Okay, thank you. All right. So this time pressing set actually helped me. Thank you for the suggestion. So yes, guys. So if we lose Friday's low, this is the next destination for me. Do I think we're gonna bounce here? No, I think we're gonna end up trading under it. But don't be surprised to see a reaction there. I just think that reaction is gonna get shorted. That's all. I think it's gonna get shorted. But either way, it could be a next destination for the Dow. That's a bearish plan. My bullish plan for the Dow. If we close over Friday's highs on the daily, you might see continuation. The most safe move on the Dow is just waiting for this SIBI to get invalidated. So if price puts a, I'll just say if price puts a body above the 50%. If we get a body over 50% of this SIBI, then I'm aiming for Dow to take these highs. All right, but anything under that, I ain't gonna lie. I think Dow is trading back to the downside. All right, so that's that. Same thing I said about Russell multiple weeks in a row. Stay away. Self-explanatory. Nothing to say about the Russell. Nothing highly probable here. I think I have to toggle be adjust again or set. Why does it say buy side liquidity there? I don't know what's going on with these charts, man. This is like supposed to be here. I don't know what's up, but either way, I'm not trading the Russell, and I personally don't think you should trade the Russell either. Look at the past how many weeks in a row. Look at these weeks. Is this stuff you guys want to trade? I don't think this is a tradable ticker right now, so I would stay away. I don't think there's anything I wanted to say about copper for real. All I wanted to say was this was an objective we had for copper to fill out this weekly VI and then see what comes next. This was literally the low so far. We filled out the weekly VI and it stopped right there. But I don't like the downside move. Therefore, I'm not interested in copper because the way that it's dropping, I don't like the fact that we're not really leaving bearish fair value gaps. I know we have one right here, but it's kind of insignificant to me. It's just a nasty move altogether. So for me, I don't really want anything. It delivered to our target with this weekly VI, but you know, I wouldn't want to trade that. Let's talk CL real quick. CL has been consolidating heavy on the daily chart. This was the move I said that we had caught perfectly. We talked about on this Wednesday, we talked about price making a strong move under these lows and made that move. And then after this green day, I said, all right, next destination, back to the highs. So after this green day, we ran back to the highs. Everything was perfect, and it had to do with how we traded consolidation. But ever since we ran those highs, y'all, man, we've been just moving sideways. Nothing to really talk about on CL for real. This the 4-hour chart. Now, is the 4-hour chart giving us an AMD setup? Do you guys think that the 4-hour chart is doing this type of move, or is it coming back to the middle of the range to push higher? I personally feel like it's going to push higher. I don't think that CL is about to get bearish. I really don't. I'm open to it, but I don't think it's going to get bearish. So right now, a lot of CL depends on what happens between these two fair value gaps. So notice there's a 4-hour BTSMC here and discount that we're currently reacting to. But at the same time, there's an hourly SIBI here that we're also reacting to, and price is stuck between the two. So with that being said, bearishness for me is if we could close under the 50% of this 4-hour BTSMC, I think we're going to end up running all these lows down here. Bullishness for me on CL is if we could close above the 50% of this SIBI. I'm talking about body closures. Then I like CL making a move above these highs. All right. But it got, the setup got to be there. Like the candles on the lower time frames have to give you confirmation on that. So for example, if we close above the 50% of this, but it looks like this, I don't really like that, right? I would need to see us start to make those bullish fair value gaps for me to say, okay, cool. I want to take these highs now. So now that we're getting those and they're being created, now we could use that as something to take an entry on. And then you could take it to the upside. All right. So, but ultimately, that's pretty much what I'm waiting on. I'm waiting on confirmation on these two fair value guys. But ultimately, if we lose this, we should run this sell side down here. If we lose this bearish one, we should run buy side. And let's just keep it as simple as that right now. Other than that, I mean, my fault. Let me go back to it for a second. Other than that, like I said, like just be careful, y'all, because as you can see, it has been heavily consolidated. It's most likely going to move this week because we have such major news events. So we're going to get some direction But I would just say wait for confirmation because objectives have been met. We ran to the downside, we ran back to the upside, and then now we're just going sideways. So, and sometimes as a quick tip, one thing you want to see by liquidity is this. Let's talk liquidity for one quick second, right? Let's pretend that price came down to these lows right now. Boom, push down to those lows. If we consolidate before we hit liquidity, that's okay because we can plummet and take it. Now, be careful of it doing something like this. That's a setup in itself, by the way. Like when you engineer liquidity into liquidity, right? Sometimes that's because they're setting up a sweep. We don't really engineer for no reason a lot of the time. So you want to be careful of that. But the point of the matter is it's okay for price to consolidate before you run liquidity. The thing is, you don't want to see price consolidate after you run liquidity a lot, because that a lot of times means we're going to end up pushing back to the upside. We're not going to continue to the downside. So when we take liquidity, you like to see a continuation. You don't want to see consolidation right under said liquidity. All right. So that's something to watch out for. So when I look at these highs right here, I'm bringing that up because I'm looking at these highs right here on CL. We've been consolidating on top of the liquidity. So that's a bearish case for me. Like, I wonder if they're setting up like now a big sell, because even if you check the hourly, like I said, we already got these lows right here. They got a huge sell side pool right here. We clearly didn't, continue to the upside. We came back into the range. So a bearish case for me is simply saying like, yo, we're not coming back to this range for no reason. We probably about to come back to the downside. Understand what I'm saying? So just be careful of that. That's all I can say. So keep both scenarios in mind. Keep both scenarios in mind. Gold is another thing I would say for gold, y'all. Unfortunately, there's just another ticker that is stuck in a range, and this is just the type of week it is. Like, what do you want me to say? Some weeks we're just ranging, and as you can see on gold, it looks like Christmas. We got green, red, green, red, green, red. It's not really moving nowhere, and so safe trades on gold are going to exist under these lows as well as above these highs. So above these highs, you can aim for the next high, then you can aim for this fair value gap up here. All of those are places to aim for, but inside of this range, I just wouldn't trade it. I don't want to trade something that has no real cohesion, has no real continuity. Like everything about it is sporadic. It's just random movements. Why is it random movements? Because that's the point of a range. You have to ask yourself inside of this range, how many fair value gaps are really holding? They're not really holding right now. How many order blocks are truly holding? They're not really. That's because price is supposed to move sideways. You're using bullish tools that you have in price action that is literally going sideways. So does that make sense? No. Use bullish tools and bullish price action. Use bearish tools and bearish price action. That's how you trade probable moves. Trade bullish tools and bullish price action. All right. So let's go to spot for a second. We're talking about options, people. I always chart on futures, even though I trade both of them. I always chart on futures, but I chart this for my people on the watch list. Cause I know everybody, is different. So I try to do this basically for you guys. And for people who look at SPY, one thing I love, like absolutely love, is the fact that we swept. Oh man, that was gorgeous, right? We swept this, came down hard. We love it. We love it. So first of all, I can see us gapping down tomorrow. Would not be surprised to see us gapping down because I feel like we're about to destroy these lows right here, and we're gonna come into these lows. Now, a safe objective is what? Always, you can say what? The lowest body at a swing point. So you can always take spot. So a safe objective for SPY is to take it to 540.87. Safe objective. I think I don't want to see SPY do this though. Let's say we don't gap down, or let's say we don't just, open up and shortly trade down after. I don't want to see SPY come up and touch the low of that 4-hour candle. My fault. I don't want to see SPY touch the low of this 4-hour candle from Friday. And because that's going to eliminate the opportunity to create a bearish fair value gap. So when price opens up, let's say open up right here, it needs to trade down shortly after. We don't want to see it close in this gap, because then it's eliminating us from creating a bearish fair value gap. We don't want to see that. So I need SPY to be heavy to the downside. We're already right next to liquidity. When you're right next to liquidity, you don't want to see price, turn back around and make a strong deep retracement, because it's like, why would you do that? If you're right next to the sell side pool, you want to take that immediately. You don't want to see big retracements. All right, so I'm looking for some continuation, potentially even a gap down right now. And like I said here, under here, I'm expecting a daily gap fill. So let's go to the daily chart, and you can see this gap. You can see this gap right here. I could erase this now. We've seen how this delivered. This was our all-time high target. You notice that how price had gapped over it, used it as a place to bounce on and run higher. This was our second target for all-time highs. Obviously, we haven't gotten there yet. That doesn't mean we won't get there. We haven't gotten there yet. We fell just short of the second target, but we definitely delivered to the first. And so I'm gonna go ahead and delete that now. And so when I say gap fill, I'm talking about if we lose these lows, I think we're gonna fill in that gap. I know you guys have seen gaps get treated like this too, where we come right next to it and then bounce again. And that's possible, but I can almost see price doing this, bouncing at first, just so it can get rejected to fill the gap fill. So keep your eye on that. So I would trim at the lowest body here. Like I would trim honestly at 540.88. Let's say I'm saying if we make the downside move, I would trim my position at 540.88, but I would leave runners to see if we want to go ahead and fill that gap, because I do feel like if we come down this low, I expect us to fill that gap on SPY. All right, so that's that. Now, here on QQQ, another one. QQQ, the objective last week, we wanted to see it fill in the remaining portion of this. I wanted to fill in the daily VI. It filled that in, got a reaction, pushed back up, and did what? What I say? We swept. I love that. I love that. We swept, y'all. Now we moving down. This is good. QQQ makes it set up for a down move, which gives me more confluence on NASDAQ, because they're the same thing, right? So for my futures trade, when I'm thinking about futures being bearish, I look at QQQ and I look at SPY. They make me confirm my bearish analysis for NQ and ES. And that's why I do still use options charts for confluence of my futures charts, and vice versa. So I don't want y'all to just marry one ticket and stare at one ticket, because you could get clues from different parts of the market. Notice we went to the dollar, got sentiment. We went to the 2-year, got some sentiment. I'm looking at NASDAQ, but I'm like, let me see what ES is doing. I'm looking at NQ and I'm like, let me look at what QQQ is doing. I'm looking at ES and I'm saying, let me see what SPY is doing. And if they're all giving me the same picture or the same bias, then I'm like, oh, okay, I like that. It gives me more, and I can use them to trade each other. All right, so I want you guys to just start looking across the market a little bit more, because it can help you out. And so obviously I want to see some more continuation to the downside. I don't want to see us come above 50% of this wick right here. I want to see continuation to the downside on this daily chart, on this 4-hour. If we could gap down, that would be lovely. And then if we gap down, I don't want to see us come back to this red body. If we gap down, I don't want to see us come back to this red body. It doesn't mean I'm bearish. I'm telling you that if that happens, I'm a fluffle. That doesn't mean I'll be bullish. I'm just saying that if that does happen, that's a very bearish sign. So if we gap down right now, open up right here where my arrow's at, we open up right here. This gap, I want us to treat this gap as a form of resistance. So if we open up, we could trade into the 50% of this gap and then come back to run these lows. But I don't really want us coming back into this red body. All right. So ideally, we gap down tomorrow on QQQ. Ideally, watching for that. But ultimately, I do think we're going to see downside on the Qs. And like I already told you, the upside plan. The thing is with the QQQ, we already got to our second target, and notice that's where we're rejecting. And once again, these are all-time high targets. And so do you guys think it's coincidental that price came to our all-time high targets called out in May? Back in May, we talked about price coming to target 1 and target 2. Look at where the reactions are. Look at where the gap up occurred. We gapped up, right? Price stopped right here. Gapped it the next day, went to target 2, rejected hard, came back, rejected hard. Maybe there's something to it. All right. Now, let's get to some tickers real quick. Some other tickers. So we got Apple. Apple's another thing that I called out when we were down here. I said the Apple target should be, mind you, all-time highs once again. This is where it should go, 217.39. As you see, we stopped right there on this target, and we've been playing around. I told you guys that, all right, I want to see Apple come into this busy, but I didn't believe in the initial bounce. So price came to this busy. This is a watch list objective, y'all. So I want y'all to pay attention to detail. It came here and I said, yo, guys, I wanted to come a little bit deeper into this fair value gap before I want to take it potentially back to the upside. So as I'm watching Apple react and then find its way back up, I'm like, dang, I mean, is that all it wanted? But I didn't believe it. I said, you know what, let me just stay patient. And, you know, I do think Apple is going to trade back into this fair value gap. I don't think it's going to, you know, bounce from here. I could be wrong, of course, and maybe that's all they wanted. I'm very cool with being wrong. As a trader, you learn to humble yourself because the market will humble you rather, and know that it's okay to be wrong. On these watch lists, week after week, I know some people are new here, but you guys see that I'm right a lot of times. And so the times when I am wrong, you have to be okay with that. Like, it can't bother you too much. That's the name of the game. So I do feel like Apple wants to come back into this busy. I want it to react around the 50% of it to trade back to the upside. But ultimately, I think Apple's not necessarily done with its upside move. I have 235 as a second target for us. But one thing that will make me bearish on Apple is if we lose this red candle right here on the daily chart. If we lose this red candle, that's not good, bro. If we lose this red candle, yeah, it's not good. It's not good. It's not good. It's not good on Apple. All right, so I'm bullish on Apple, everything above that red candle. But do I just take a trade simply because we touched that area? No. Y'all should know we take things with confirmation. So if we're making, let's say, bearish fair value gaps into that area, I would want to see us make bullish fair value gaps shortly after, invalidating the bearish fair value gaps that we just created. So if we could invalidate this bearish fair value gap with a bullish one, especially with a bullish one, then the Apple, I would take that thing all the way to 235. No lie. Simple. And if I'm not seeing what I want to see, guess what I'm doing? Staying cash. Or I might just join in on the downside, like, oh shoot, we made a SIBI and we respected it. All right, bet. Now that we respected it, I expect price to take these lows. So I'm gonna get in somewhere on this part of the price leg to take those lows. And I know if we take these lows, chances are we about to run these red lows. And if we take those red lows, oh yeah, oh man, oh yeah, Apple about to get bad. Feel what I'm saying? And they got a gap down here and stuff, like, oh yeah. So that's how I'm a trader. No matter what, I'm a trader with confirmation. That's my point. All right, so that's that. Now here on Adobe, this was an objective we had on Adobe. We wanted to use the upper 50% of this earnings gap to run higher to fill out this old earnings gap. It's almost there. I think that it's going to complete the objective at 568. I almost took this play. I actually was going to take it with shares, and I literally decided not to at the last minute. I was like, you know what, whatever. So far, it's working out, and we'll see if it wants to continue. But just showing y'all the update on Adobe. Now, Amazon has an interesting setup to me, y'all. Amazon. So here we have super nasty consolidation that happened on Amazon as we got to these all-time highs. So these all-time highs, notice that we were playing around here for so long. That's just a bad sign. So they just engineered more liquidity right here. Notice that we ran that. Okay. Now, do you guys see the potential for what? You see the potential for an AMD setup, right? I see it. I definitely see the potential for AMD setup here on Amazon, especially if NASDAQ does flip bearish. So my eyes are peeled on Amazon right now. Now, I'm super bullish on Amazon if we could come into this daily busy and then create 4-hour or 1-hour busies out of it. So now that we came into it, what you want to see is, first of all, if price can invalidate this fair value gap, that's already a bullish sign. So let's speak to that for a second. This SIBI on the 4-hour chart, if price is truly bearish, it shouldn't come to the upper 50% of that. It shouldn't come to the upper 50%. So if price is truly bearish, one, it honestly won't even trade back to it. It won't trade back to it. But if it does, it gotta hold under 50% in order to see some more downside. It got to. Because if it comes above here, I'm just gonna be bullish on Amazon and I'm gonna find the next upside objective. I know we at all-time highs, so I'm gonna do my method to find the next all-time high. But let's say Amazon, honestly, if Amazon puts bodies on the low end of this busy, I like Amazon making a down move. Honestly, I ain't gonna lie. You could be very safe though. My fault, this is a daily busy, my bad. You could be safe though and wait for Amazon to lose like, 186-ish. If it can lose 186, that's a safe play to me. But I do feel like, man, a lot depends on this daily fair value gap. If we don't use this thing, Amazon look bad. So I'm very interested in this play this week, real life. Um, and by the way, look at the weekly chart. This is how you combine time frames. Look at the weekly chart. If the weekly does trade to the downside, guess what that makes? That prevents the ability to make a bullish fair value gap. Think about it. Think ahead of time. If we opened up and we traded down, there's no bullish fair value gap. That's a bad sign. That means that Amazon's gonna look like this. That means we would have wicked above the highs, meaning we took the buy side liquidity and we came back in without even leaving a bullish fair value gap. That's not good. That's not good. That's not good. And Amazon was not even making BTSMC on the way there, was it? Do you see any bullish fair value gaps on the weekly chart on the way to these all-time highs? Nope. Do we believe in moves that look like this? Nope. So all I'm saying is they on watch. They definitely on watch right now. They on big watch right now. We're gonna see what Amazon gonna do. Shout out X1. I don't know if you in here. X1 was telling me look at Carnival. I was checking it out. What did I say about Carnival? We wanted to see potentially more upside. Like they look really good. They reacted to this discount busy push. It was nasty push, but it just got real energetic last week. Like last week had a real nice bullish candle. So you want to see what a bullish fair value gap come out. We don't want to see this coming week, trade back into the range like that. Something that it could bounce on next would be this BTSMC right here. So I'm looking to see if price could hold this daily BTSMC and VI overlap. But ultimately it will be the candle from June 25th. So if we could hold the candle from June 25th, now I like CL making a move back to the upside. So how would I take it? If we come back to that's the only time I'll take CL. I don't want to take it on impulse. I need this pullback first. Otherwise, I'm just going to leave it alone. But if it pulls back first, I need price to come here and then start making hourly, or you could be safe and wait for 4-hour bullish fair value gaps. Because if it does that after touching the purple, it's probably going to continue. And then you could take it past these highs. And was there a higher target? Let me just double check for y'all. Oh, I liked it past these highs because, bruh, we got, man, CCL Carnival honestly could see its way to like above $30. It really could. So, I was definitely looking at this play. I remember I had this initial arrow. I had this plotted for mad long, like literally like a few months now. I had it because I wanted to see what price did when it got to this weekly, right? Yeah, this weekly BTSMC because it's in discount. And I knew that if it don't use this, I mean, yeah, we would have ran these lows and ran these lows, but let me not go on a tangent. Coinbase, nothing I want to trade, but I just wanted to say for Coinbase, if we don't hold this monthly BTSMC, it could get bad. All right, so we still in this monthly BTSMC right here. We talked about not believing in moves that look like this, so we expected that move to get taken back. Obviously, right, this upside move was super suspect. That's why it got taken back. If it could reject this VI and move back to the downside right now, that's also a sign that we're probably going to run the lows and can come back into the BTSMC. I pretty much anticipate that Coinbase is going to trade back into this monthly BTSMC right now, and we better hold it, because if we don't hold this thing, it could get bad on Coinbase in my opinion. Latoya says CCL is so fire. She's been in since Tuesday. She got the September expiration. Yeah, I hope it continues to print because it looks good. It definitely looks good on the charts right now. Ms. Ann said, how could hurricane season impact cruise ships? I'm not sure. I'm not even sure for real talk. Like, cause I'm always based on the chart anyway. So I don't even know, but maybe it could be some confluence for the trade, honestly. But I don't have the direct answer to that. As far as Delta Airlines goes, I think I wanted to, what did I see here? I must have seen something. If I got a red flag on it, that means I seen something. 1 hour. Maybe not. Yeah, I'm not gonna say, because if it's not apparent to me on first look, then I'm not even gonna say. I made this on Friday, by the way. So it's been a couple days since I looked at these tickers. Disney is something we were watching last week. We wanted to see price turn back around to the downside. So this is the weekly chart. Disney turned back around to the downside, and when it did, we said the next destination should be to fill in this monthly BTSMC. Let me go to the monthly so you can see it. All right, we want to fill in this monthly BTSMC. And what do I mean by that? So remember, guys, a fair value gap is a gap. It's a gap. It's not always just simply used for bounces and rejections. It could be used as we use the same way we use gaps. And so being that we're already filling out this gap, I expect us to continue to fill out this monthly fair value gap. And the blue area that I have drawn here is, I don't know, so I'm gonna go ahead and fix that. I'm gonna go ahead and just make it the monthly. All right, that's the monthly fair value gap for you right there. I think it'll get filled out, and under there, it could actually have some serious downside. I'm not gonna lie, which I do anticipate. I do anticipate that Disney could trade pretty hard to the downside. We got these sell side targets right here, down here at 78.55. It's a lot that has happened before we get to those areas, but based on me having a bearish bias, I was able to catch some 0DTE sells, puts rather. I caught puts here on Friday on Disney because I was already bearish entering the week. So I'm looking at the consolidation, and once I started to see that, I mean, it's kind of self-explanatory. You can see what the energy looked like. So I was able to catch some of this, just trying to trade it into these lows. And then once we started to turn around, I took my profit. Plus, it was, getting closer to the end of the day anyways. But nice little sell on Disney, honestly, but I think it's gonna still keep going to fill out. Hey, this is the hourly chart, just to at least fill out. That is a simple target to me, honestly. So we'll see how that continues. DraftKings, I only want to show y'all this just so you guys can see the update on what happened. Yo, bro, we really got it at the top because oh my gosh, I don't know who caught downside. I thought I was nice with catching the upside, but clearly I missed out on the real move because DraftKings, we got out at the tippy top, highest body on the weekly because yo, this hourly chart is crazy. They sold all the way back off. So I just wanted to show you that as a lesson to say, take your profits at targets. Don't get caught holding the bag because you might end up took all your gains back, all them gains, y'all, everything. Give me all that. I don't think nothing here. This was a Watchlist ticker. We wanted to use this maybe to take us lower, and golly, if y'all remember this Watchlist, whoever took that first solar plate is killing right now. I don't think there was something I wanted to say about it though. I think that's just a flag from a previous week. If first solar don't bounce early in the week, it's gonna make a big move to the downside. I could say that off of the weekly alone. It gotta make a big move like almost immediately. Otherwise, that's not a good sign. Real talk. They gotta make a big move early in the week. Google, I wanted to show you guys the all-time high target we were talking about on Google. That was exactly where it rejected, y'all. So since many moons ago, we talked about Google coming to this target, and so far that is where it rejected, y'all. Look, that's where it rejected, right at this all-time high target. And so now, if it doesn't hold this BTSMC, it should make a big move to take out these lows here at 175. In my opinion, I think if this hourly BTSMC doesn't send price back to the other side, I like Google coming back to 175. All right, Home Depot, nothing I wanted to see on that anymore. We already caught the upside here, then it came right back down, and it's currently using this gap as support, but we'll see how long that lasts because this upside move is a little bit suspect to me. I don't think there's something I want to see on Kruger. Nah, I should have unflagged some of these. Not bad, because some of these is old flags. Let's go to. I want to make a point about Nike real quick. People, make a point about Nike real quick. Oh my gosh, man. I could use a monthly, I could use a weekly. It doesn't even matter. I'm gonna use a weekly. Yo, I love the monthly time frame because it gives me direction. So many moons ago, I actually talked about this on the watch list. I don't know who remembers, but many moons ago, I said an easy target for Nike seems to be based on the monthly. We're gonna run these lows and we're gonna run these lows. And then ultimately we can see if price wants to trade back into this wick. I would probably target the halfway mark of this wick somewhere down here. Let's go ahead and actually look at what that would be. Let's go ahead and put it. I actually didn't mark it on my charts. I'm gonna mark it on my chart and see where that's at. Okay, so I want you to take a lesson from this. All right, so the monthly gave direction. The weekly, we could use what? Maybe this weekly SIBI to take us under these weekly lows. and then get us to these lows down here, right? So because if we run these lows, do you want to take all your profit? And that's why I use a higher time frame, because now you're wondering like, okay, we ran these lows, should I just take everything off? Hold on. That's why you come to the monthly chart and we look at the monthly. The monthly is pretty clear that we're gonna run these lows. All right, so you can know, okay, I'm gonna hold it past my initial target. I'm holding runners, take profits, but hold some runners to your next target. All right, so boom, keep that in mind. Could you expect this to happen on a daily chart though? And I was a victim of this consolidation because I was in Nike swing puts that didn't play out for me. I didn't lose money because I ended up stopping out break even. And I just left Nike alone because it did this for like 2 months straight, bro. Like all of this nonsense. And then out of nowhere, people, it gapped down this hard. This thing dropped like 20% in one day. So we killed our monthly target. Our monthly target was these lows right here. And so Nike, I would just try to see if Nike can aim for 70, 49 or 70, 50 right now. But would I trade that? No, I'm not going to trade this. I don't want to trade this. It's the move already got made. You can't anticipate chop like this, you know? How do you know when to take 50% of the wick versus not? Is it the size of the wick that determines it? That is contextual, and that is a big concept that I talk about in SMC, and why I want everybody to be careful about what sources you're tapping into for your knowledge when it comes to SMC, because everything in SMC is contextual. There is no hard rule to say always take 50% of wick when it's this. Like, no, it depends on the overall direction. It depends on the energy behind the move. It depends on where you truly see price going to on a higher time frame. So it'll tell you whether to expect an entire gap fill. It'll tell you whether to target the highest body. It'll tell you whether to expect just the 50% of the wick versus the entire wick versus, I don't even gonna say something else. Like there's another target we could use. But all I'm saying is so there's no hard rule I could give you. I would just tell you in this scenario, if I'm looking at the monthly chart, I would target that based on the monthly chart in this scenario. But do I want to trade that, being that we're already right next to it? No. The risk reward is all off. When I was in it initially, this is when I should have been in it. But could I predict that it was going to chop me up for freaking 2 months before making a move? No, I can't predict that. So Ms. Carmen said, do you consider earnings? Like Nike fell at earnings. I'm not even concerned with this. I didn't even know there was earnings. Literally, I was just like, okay. I'm just following the chart. Like I can literally see where it rejected. It rejected at the halfway mark. Look at what the body's respected. The halfway market is weekly SIBI. Look at where the body's respected to make that move. This is just straight technicals. I don't even pay attention to earnings or news. Like this is, I literally talked about this exact move on the watch list before. So y'all know I'm not just making this up. Go back previous recordings. I talked about Nike. I didn't expect the consolidation, but yo, it used our POI, the weekly SIBI, to take us way under these lows. Like, come on, man. So it's always in the chart. It's always in the chart. So all right. So here comes Nvidia. Nvidia, man. Nvidia's interesting. So last week we talked about Nvidia coming into, which area was it? I forgot. But either way, it invalidated some nearby tools. So it has its first signs of potentially giving a retracement because it invalidated its nearby tools. So when something is moving as aggressively as Nvidia moves, you want to see if it will continue to respect the nearest PD arrays or the nearest tools and price action to continue that move. Well, the nearest tools that we had on Nvidia to continue higher would be, first and foremost, it'll be this red candle. If you don't want to talk about that, you could say we had this VI right here and invalidate both of those. And then you could talk about this BTSMC and validated that. So it invalidated all nearby tools. Cool. Push down. Now it's currently rejecting around this VI area, both of these VIs. All right. So now I want to see some moves back to the downside. But when it comes to Nvidia, because I'm expecting downside and I'm seeing this consolidation, what will I be watching for? Either straight up downside immediately, or if we could sweep these highs to come down. All right. But if we take those highs, this is when I flip bullish on Nvidia. If we take these highs with bullish fair value gaps that either don't get traded back to, or they get traded back to and respected and made another one, and we make another one after that, oh yeah, Nvidia is going to end up running these highs. So the only how I'm going to be bearish on Nvidia or remain bearish on Nvidia, because I'm currently bearish in the short term, the only how I'm going to remain bearish on it is if we just obviously drop off, or if we sweep the highs and then come back into the range. I don't want to see a continuation to the upside, because then I'm going to be targeting all-time highs again. All right, so it's as simple as that. I think they're ready for not a crazy retracement, but just a little something, like, a little retracement type vibe. Like on Nvidia, I can see it come back to this weekly busy. That's why I have it highlighted and make it more. Oh no, it's fine. I can highlight that. I really could highlight the VI included, but whatever. I expect this to come back to this green candle from May 20th right now, just from where it sits at right now. But there's a lot of confirmation that has to happen. This is still the very top of that move, so we'll see where that goes. So Shay said, you blaming Drake for the shoe flop? Chill on. Drake's having a very hard past couple months. Chill on my bro right now. I'm a big Kendrick fan though, so I'm cool with it. King Ellie said, so you mark up the monthly, weekly, and daily SIBI and BISI, then enter on the lower time frames. So basically to kind of explain like how it would go about like any watches or any plan I'm drawing up, like even if you're just looking at Nike as an example for it, it's like I'm getting direction from the higher time frame, and I only want to trade on tickers that have a higher time frame direction, because that's just, guess what, the easiest trades to make, just the easiest ones. And I want to keep trading easy. Who wants to be stressing over a chart? So when I look at Nike during this particular month back in March, I'm like, oh, well, duh. Like, we finna take these lows, and if we take these lows, we're obviously taking these lows. And then after this, when we take these lows, I mean, yeah, come on. There's some targets down here that I could get into. All right, so, but even initially, just coming from 93 to 82, that's a nice little move on Nike for sure. So monthly, I have direction. Now, if there's a POY on the monthly that I like, I'll mark it off. But in this case, there was no POY. But for the weekly time frame, there was. So remember, the monthly told me I'm coming to this yellow line as a first target. The monthly told me that. So when you come to the weekly, you say, all right, if we're supposed to go to the yellow, what would I want to see the weekly candle do in order to support that bearish thesis? Well, the weekly, I have a weekly bearish fair value gap. So being that I'm bearish, don't I trust bearish fair value gaps because I'm bearish? You see what I'm saying? So it always comes from getting direction first. So I already have direction. So I trust this fair value gap. I trust price to hold this. Ideally, I need bodies to hold the under 50% of this in order to tell us to come down here. And yeah, in this case, this will be a swing, but I take the same approach with my day trades. But in this case, yeah, this is a swing. But it's like, all right, so as long as price is holding this, especially if bodies hold under 50%, I like this. Now, if bodies were to come above 50% of this, I get a lot more weary on this trade, real talk. So, well, I guess what happened here? I guess we made like equal lows. Yeah, facts. I remember this. I try to do this with my mentees. I had called out Nike to the downside. We had a nice trade going, honestly. And did we take profits? I think we took profits on some of the position, and we wanted to leave runners to run these lows. Bro, it came back up and stopped this break even. I'm like, yo, ain't no way. Nike came so close just to turn back around. I'm like, all right, bro, y'all got it. And lo and behold, we ended up consolidating for the next 2-3 months. But anywho, all right, so what did I say? If you're truly bearish, you will want to hold under 50% of this SIBI. So now that you're inside of this SIBI, in the ideal world, now that you're in the POY, you have a direction already. In the ideal world, you have to ask yourself, okay, what do I want to see from the daily chart? The daily chart is going to be showing you the same thing. If the daily starts to make SIBIs from here, you know where we're headed already. So now if the daily's making SIBIs from there, you could use that daily SIBI as something to enter on. Price opens up the next day, boom, entry to the downside. That's something you could trade on. You could enter on the impulse, because sometimes this SIBI right here will not get traded back to, especially when price is on a mission. It'll just keep going. So you could enter on impulse, and your stop loss is based on the respecting of this SIBI. So let's say you got in where my green arrow started at. You just got in. Your stop loss is if we don't respect it. So price comes back up. Oh, it disrespected it. Never mind. I don't want this trade no more. So your stop loss is entirely based on the fair value, and you could trim if it comes above the 50% of it, because that's already a bad sign. So you could scale out just like you could scale in. But that's that. But either way, so now I'm using that daily fair value gap, hourly, whatever you want to use in that price leg to take you to the downside. Because if you know price is headed to the yellow, let's remember we're trying to take the blue area up there to the yellow line, right? So if you know price is headed to the yellow, do you believe in any rally? As we're dropping, price don't never drop well, not never. A lot of times price don't drop in a straight line. So as you know, when we make the zigzag or when we make a retracement, do you believe this is a reversal? Why would this be a reversal if the higher time frames already told you we're supposed to use this SIBI to take us to the yellow line? You feel what I'm saying? So therefore, it's a retracement, not a reversal. So anytime Nike starts to trade back up, you have to ask yourself, okay, we're trading back up. What the heck are we trading back up for? What are we trading back up for? Now you're looking at this price leg and you're asking yourself, on this price leg, what exists on this price leg for me to take a trade on? Oh, wow, yo, look, there's a nice fair value gap here that price is probably just going to touch this fair value gap and drop again. Lo and behold, drop. Where's your entry? Inside this fair value gap. Not to get too complex, but I do the same process. I just keep scaling it down. This is an hourly fair value gap. All right, so where I'm gonna get my confirmation from? The 5 minute. So I'm gonna lose some people on this. I know that, but I'm gonna say it anyways. Now that we in the 5 minute fair value gap, what I wanna see? I wanna see the same thing. Price use it, turn around, start making bearish fair value gaps. I might get in on the bearish fair value gap that I see, or I can try to snipe it. If the 5 minute starts to turn around for a second, what is it turning around for? There's probably a 5 minute bearish fair value gap here. I'm on the 1 minute. I'm on the 1 minute and I'm sniping an entry inside of this 5 minute bearish fair value gap. And to be honest, I'm not even gonna go there with y'all, but I'm gonna do the same thing using the 1 minute and the 15-second. And that's how I'll get the actual sniper entry, to where I'm not gonna even really have too much drawdown, because I'm typically getting in at the legit top of this retracement move right here, because I'm looking at the lowest time frame to snipe that reversal. So as the 15-second, finds its way to make bearish fair value gaps, I'll get in on a 15-minute bearish fair value gap, and then I'll use that as a form of my stop loss. Because if we're truly bearish, let's say there's a SIBI here on the 15-second, I know I'm losing people. If there's a bearish fair value gap here on the 15-second, this should be respected. It should 100% be respected. So if we come back above it, I already know this is the start of a reversal. If we came back above this, guess what we're gonna do? Come back above this. Guess what we're gonna do if we come back above this? Come back above the 5 minute SIBI. If we come back above the 5 minute SIBI, what we gonna do? Come back above these highs. So this whole thing ended up being a reversal, and I was able to get out because the 15-second showed it to me first. The reversal starts on the 15-second before it gets to the 15-minute, before it gets to the 15-hour, before it gets to the 15-year, right? Reversals start on the lowest time frames first. So I'm pretty much, I use the month, I scale everything down, That's why I'm always this multi-time frame analysis, and it's like, that's how I scale into my entries and stuff. And my stop losses are super close. That's why I always say I don't really have big losses in the market unless it's emotional, because I'm just like anybody else. Sometimes I get emotional in the market, and that's how I could blow a funded account, for example. Like I blew a funded account last week and I got it right back the same day. But I'm just saying, that I got emotional one of the days last week. I had one red day on that account. That day I was green in totality, because my other funded accounts I had made my bread. But then that specific account, I got really emotional trading that afternoon, and I got it back. But I'm just like anybody else, where my emotions get the best of me. So if I'm having a big loss, typically it's emotions. But technicals wise, heck no. There's no reason for me to take a big loss on technicals, because I know when reversals are about to start, because I know what it looks like when it's starting. You're gonna see it on that lowest time frame first. I mean, Thyra said broke the chart down to the quantum level. I'm weak at quantum. Yeah, And that's why I love this stuff, because it's like I don't know, it's like a game or whatever. Maybe it's because I have a math brain, why I enjoy this type of stuff, but I love price action heavily, you know. Jamal said this golden advice right here. Yeah, I hope so. I hope so. I hope it's helping. Um, but yeah, shoot, dang, I didn't mean it. I didn't even expect to talk about that stuff, but that was good. Uh, it's not really much more I want to talk about here though. As far as tickers, I'm pretty much almost about to wrap the watch list up. I'm trying to think. What do we want to see on plug? We want to see if we reject here to come down. We never even came here. We just come into the target in itself. Um, so this never played out in the sense that we didn't get the retracement. It just kept dropping. We were correct about direction. Why? Same reason we've been talking about. We get our direction from what? The monthly and the weekly. So I think it was a weekly I was looking at when I was deciding plug's direction. Yeah, so I was looking at plug. Ignore these last two red candles. I was looking at it after this red candle right here that my mouse is on. So seeing the weekly direction is clearly gonna come to run. It's probable that it's gonna come to run those lows. I gotta be careful with my words. It's highly probable. The weekly tell me where we're going. Okay, so I come to the daily and I say, all right, what could we use to get there? So that's why I have marked out. We could probably use this SIBI to take us to that yellow line. It didn't even. It just kept dropping. All right, cool. So now we're gonna just look for some other POIs to take us there. But plug has had some tricky delivery because it consolidated, then it did an AMD. And if you guys want a visual of an AMD, now you guys can see one. This is what I'm talking about. It manipulated to one side, came hard back into the range, ran the lows from the week. And now I want to see if we could continue to run out that 225 liquidity that I was talking about. Only thing I'll say be careful of is you don't like when you're leaving a range like this without fair value gaps on this lower side right here. So be careful because there's no hourly SIBIs. Maybe there's a 4 hour though. Okay, the 4 hour is not bad though. So I actually like the 4 hour. So hopefully we get some continuation on plug to 225. But I at this point in the price lag, I don't really want it no more because it's we too close to the target. The risk reward is all off. But if let's say you were in that swing, I doubt anybody was in that swing because of the consolidation, but you know, it got there at least. And maybe there's no more. I don't think there's any more tickets for real. Yeah, I think that was it. So yeah, I'm largely watching that NASDAQ. Like I said, I'm watching NAS. It looks like it's dropping based on, let's see. Oh, we got to the target we talked about at the beginning of the watch list. But I told you guys be careful of chop, right? So we obviously ran the yellow line, and what has happened since? We've been moving sideways. As I said, in Asia, be careful of Asia, but yes, it was an easy target, I know, but I still don't even take stuff in Asia. So you know, I really should be here. It's rejecting it. We'll see what price wants to do by the time New York comes around. And just as a quick reminder, if it does even come back above here, that doesn't mean I'm bullish. Nope, because we're in a range right now on the hourly or on the hourly range. So I take every fair value gap with a grain of salt. As long as we're in this hourly range, I take it with a grain of salt. So far it's playing out, but I'm not gonna get too hyped. I like NASDAQ if we lose this BTSMC. Once we lose this BTSMC, I think there's some nice moves coming in the NASDAQ, y'all. If we come back above the 50% of this wick, we could get some nice moves to the upside. We got the second target up here. Make sure it's on your chart, 20,533.25. All right. So hopefully you guys got a lot of value out of this. Make sure that if you're watching this on YouTube, you subscribe to the channel right now. Like definitely subscribe right now. Like the video. In my description, you have my mentorship starting next week. Check that out. You also have the free community. It's a free community link in this description right now. So if you're on YouTube, come rock with us. You could be in the Zoom with us, ask questions, all of that, man. So much love, and that's all she wrote.